And we're live from Mexico, where Matt is also in Mexico with me, but he refuses to do this in person.
Buenos días. Me
Hola,
llamo
amigo.
Mateo. ¿Cómo se llama?
Bien, ¿y tú?
Oh.
¿Qué bien? Señor
What's your name? Good. And you? How good?
Tevis? Señor
Yeah.
Tevis?
What's really fun is I've got enough Spanish to get into trouble, but not enough to get me out of it. So
Yeah.
I know nothing, so Tevis has been correcting my Spanish all week. So
fun.
All the wait staff know Mateo. I came in. I went into the breakfast area this morning, and they were like 2, 3, and I was like 2, and they're like, "Oh, you're with Mateo," and I'm like, "Yes," and they're like, "Okay, we'll," and they sat us in the same spot. Oh man, it's because he tips them all so much.
they had the little flamingo swan, and I pointed out to Tevis, and I was like, I think that they think something more is going on here. But they had the little swan origami thing, and Tevis is like, oh no, that's it. And I'm like looking on every other table. There is none on any other table except for ours. So anyway, they probably think we're madly deeply in love, which I would do it for the honeymoon suite.
Matt Money, ladies and gentlemen.
No.
Roy, how are you, sir?
I'm not in Mexico, but I'm good otherwise. So glad to be with you, gentlemen. Glad that Matt could join us, Mato Dinero. So, and markets, I mean, there's always something cooking. We're usually in a quiet period before earnings really start ramping up, but that's really not been the case this week or last. So a lot of stuff happening, a lot. And what was really fun today, I'll have a video coming out, and Tevis has a similar one too, because one of them is a play we have in common. I usually don't talk about swing positions much, but I have 2 right now, which is a rarity for me. Between those 2 and PayPal, my portfolio actually ended up green today, despite like getting beaten down on a lot of other names. So I was like, okay, I'll take it.
Yeah, I wrote some more hymns cash secured puts today. So that, and I think Matt, you rolled a bunch of stuff today.
Yeah, it's been a great day for me. Rolled my Amazon July 15th out, my Google. Maybe I did that yesterday at breakfast, Tevis, and then today in bed this morning rolled my Googles. So just chipping away, man. I'm hitting singles, right? I'm not trying to hit a home run or anything like that. We're talking about 205s here. The stock's trading in the 170s, so super far out of the money. They're my golden geese, and I don't want them to get called away. So I'm okay just writing and getting a couple $100 and calling it a day. You do that on a couple positions, you make a couple $1,000 a month, and that's the name of the game.
And Big Jeff is on your side with that 205. So at 200, boom, every time. Maybe not this time. We'll see. But yeah. No, yeah. I likewise. The other night, Robinhood was like, it's like $98 in the after hours. I'm like, I've got $100 covered calls. Like, I was conservative. Like, come on. And so it falling to 94, whatever it is today, I'm like, okay, good, breathing room. This is lovely. So, got to take advantage of those opportunities.
Yeah. One thing that's not going well, and I made a post about this on Twitter, is Tesla. Do we want to start there and work our way backwards? So maybe I can share this post, but maybe I'll read it out and I'll get you guys' thoughts. But hold on, because I'm on one screen only today. All right, here we go. I said, so the news was that Trump and Elon are back bickering again, and Trump threatened to cut government subsidies to his companies, which, I mean, Elon has been very public about the fact that they help other companies way more than they help Tesla. Quote, Elon may get more subsidies than any human being in history. This is Trump by far. And without subsidies, Elon would probably have to close up shop and head back home to South Africa. So, yeah. Anyways, Tesla was down. And I said, look, I absolutely love Tesla and their product lineup. And I believe despite the deep execution risk involved that they can and will make it. But in the short term, the political back and forth is becoming such an unbearable overhang. It's calm for a few days, and then a barrage of political tweets. And I mean, Elon even himself said earlier today that he like almost took the bait and started escalating further. And I can jump to that tweet in a second, but it's basically just overhang on the stock in the short term because, as I mentioned here in this post, I said, look, if you're long-term invested, it ultimately doesn't matter. But as long as his attention is, as long as Elon's attention is still full-time on Tesla, but number one, it's uncertain that it is full-time because all of these political posts are basically like a symptom of the fact that it's still on his mind very actively, this inability to detach from politics. And then number two, there's going to be more pain in Tesla in the short term, along with the deteriorating fundamentals we've seen over the past 6 quarters. Like it's been stagnating from a financial perspective. It puts a lot of pressure on robotaxi, which I think the short term after the Austin event, it's somewhat already priced in. And then Optimus, which is still years away. And it just, to me, feels very exhausting. And I also mentioned that, I've been reducing my position and allocating to some other names that's going to let me sleep easier at night. I'm still keeping like a token long-term position regardless, because I think it's going to smooth out in the long term. But it's just, it's kind of grueling in the short term because you never know when the next shoe will drop or, what I'm going to wake up to in terms of like a tweet barrage from either the president or from Elon. And I know many Tesla shareholders feel the same way.
If Elon was trying to alienate every person across the political spectrum, I don't know that he could do much of a better job. And that's not, frankly, a great thing as a shareholder. I'm glad that I've reduced a lot of my Tesla position. Is there a price that I'll start buying in? Absolutely. Under 200, I'll give it a look. Under 170, I'll definitely start buying again. I mean, it depends. If the entire market is just dropped and plummeted, maybe not. But right now, like, the higher the price is detached from its fundamentals, and Tesla, runs on a narrative, the more risk there is. So Tesla at 340 is a lot more risky than if it falls to 140. So less risk there. Matt might even buy a couple of Teslas at that point. I mean, also the stock itself, we'll see. But there's a lot of stuff that's negative, and really, like, it's not just brand damage on the short term. I think some of it's overstated, but the longer that Musk keeps at this, the more persistent it'll be. One of the indicators we have, and we've talked about this in the past, that the brand damage is not as bad as it perhaps first appeared and initially appeared, is the used car market. The used car market right now, has advantage of the EV tax credit, which will be going away relatively soon. But there's been insatiable demand for Teslas on the used car market for the past couple of years, and it's not changed. It's only been ramping up even before it looked like the used car credit was going away, that dealers could not keep enough of them in stock at all. They'd get all they could and they'd sell them really fast. So that signals to me like perhaps pricing issues, other issues, but brand issues themselves, no. There's long-term, like if this continues, like the challenge is fewer people will use a Tesla robotaxi if they freaking hate Tesla and they don't trust Musk, because there has to be an element of trust when you have a computer driving you around. And eventually when Optimus comes out, now for consumers, en masse, maybe that's like 5, 6, 7 years. It's a ways out. But if a lot of people don't trust Elon Musk at all, they will not want one of these in their house, even if it's the best in market. So I don't like this persistent brand damage. There's a lot going right for the company itself, but he's making things harder. And then you have little things like this too. We already know, Q2 will not be good for delivery numbers. What's starting to trickle in, and it'll come from Europe first. Denmark and Sweden have declined by 2/3 respectively. That's just not great at all. And that's even like before you could have the excuse of it's because of the refresh. Well, the refresh is out now and it's scaled over there, so not so much.
I'd be curious to see. I'm actually going to ask Grok right now if there was some other broader thing that happened in the Nordic countries that would actually cause that drop off. Like, was there an EV credit removed from them as well, which is obviously making it more costly? That's something I don't know, and I'm curious to see as well as the EV credit rolls off here in the United States. I mean, Amit himself even mentioned that if the EV credit was gone, he might not have been able to afford the opportunity to buy a Tesla himself. So
He could have
it's
afforded
interesting.
it.
Well, he could have afforded it, but he didn't want to buy it, right? I think he
He's not
stated
Tevis rich, but I mean, he's
well,
doing
nobody's
okay.
Tevis rich, even myself. But that's a different story. Matteo Dinero might be though.
Yeah, maybe, yeah.
Maybe, but no,
Rockefeller.
I from a stock perspective, it is financial suicide, right? In some sort of way. I mean, maybe suicide's maybe a more dire term that I should use, but from a political standpoint and from a morale standpoint, I'm actually I admire Elon for putting his morals ahead of his financial gain.
Yes.
And so from that perspective, I'm like, go for it, bro. Like, even though I might not 100% agree with everything he's saying, or how he's saying it, I think it's very admirable for him to say, you know what, screw playing the game how other people want me to play it. I'm playing my own game. And if that means I lose a little bit of money, I think in the long term, as people have eloquently put on X and others, Trump, as much as I agree with some of his policies or disagree with some of his policies, is only in office for another 3.5 years versus Elon. Hopefully, we have him around for much longer. And so uh, I don't necessarily think after Trump gets out of office, might he have some local things that he can do? Yes, but I think he's going to be rather limited as president or a previous president to be able to do anything much beyond. Right, he'll lose that sort of Senate and House sort of ability to influence and things alike. Versus an Elon, he has a lot of power, and he sits at probably the top 200 people in the world that control a lot of what we talk about, regardless of whether or not we believe that there's some sort of shadow government. In reality, there is. And so I think that that's what he's fighting for. He's fighting for what he believes in, and at the end of the day, he probably will do extremely well, even if that means what am I trying to say? Lobbying for an additional party,
Yeah.
So I think there's a subset, but will that party succeed? Hard to say. I mean, the Tea Party didn't really succeed. So anyway, I don't know much about the subject, but that's all I really know, and that's my thoughts around it.
I think we can talk about the, America Party. I think that's an interesting topic of conversation. But, my bigger concern is not so much like the lack of trust that people are going to have with Tesla products, and it's not so much the fact that Elon's putting his morals ahead of his wallet. Like, I agree with both of those, but I think the thing that makes me more concerned in the short term is the context switching of him being fully locked into Tesla. Because there was a time where Tesla was the only real thing and it was make or break. And I feel as though that's when he operates best. If you read the Ashley Vance biography, the Isaacson biography, all the best times from a performance perspective have been when it's it's all on the line, right? And I feel like that pressure is something that he responds to well. And now it seems as though, okay, Tesla has a very clear roadmap ahead from a technological perspective, and his attention is diverted away to politics, and it dilutes the amount of thought that he can put or how locked in he can be as this, wartime CEO to get Tesla to the next level. And I think it was the most bullish thing in the world when he was like, hey, I'm going to step back from politics. I'm going to step back from Doge, and I'm going to focus on this. Because the moment that Tesla started falling was when he bought Twitter, because of the same reason, right? His attention was going to be diverted. And then it went from Twitter taking up his attention, the new shiny thing, it went into Doge. And now that he's handing off Twitter and handing off Doge, I mean, to some degree, right? He's always going to be involved. But from what is the main focus of his attention? I thought it was going to be Tesla, but for the fact that these tweets are continuing and he's still so closely tied to political decisions, it just leads me to believe that this is still if he starts a new America Party right now, how hands-on / hands-off do you think he'll be? Because any time that is dedicated to that or whatever other endeavor is time taken away from Tesla.
Yeah. Yeah, and I respect him, for the stand he's making regarding this bill, which there's parts of it I love. Like Invest America, I think is great. There's some things that are in there that are very good, but there's a lot of pork. It increases our deficit. And that's the main reason why this is happening right now, which I don't mind as a shareholder, but ultimately, like, is this great for America? Not really. So this is, you guys know what this is, but for our audience, the DXY, this is basically a basket of currencies that trade against the United States dollar. So it lets you know whether the dollar has been strong or weak. If it's weak, you might think, oh man, that's a terrible thing. It's actually really good for for the most part, for investors. Most of us are invested in companies that are based in the United States that are net exporters, not importers. That's kind of the way our country is right now. And as a result, this actually strongly benefits companies like Apple, like Google, like PayPal, that do a lot of international revenue that always either have to hedge heavily against the currency changes or, report, pretty big losses relative to what they'd have otherwise. Now, this looks disastrous, but it's not. It's just showing a slightly weaker dollar. But a lot of that weakness is because of that deficit. And frankly, the big, beautiful bill passing didn't help. If you zoom out, now this is going back into the 90s, 100 is base level. So you can see it's been elevated, for quite some time, really since 2022. And it was under for a while. It was really far down here, which was not good. Like, you don't want to see it ideally like extremely far from 100. It's fine if it's a bit stronger, if it's a bit weak. So right now it's a good thing, but it's something to keep an eye on. If we continue printing money like crazy, it's bad for treasuries, it's bad for yields, it's bad for a mortgage market, it's bad for, our future Americans, including Tevis, who will be part of the 51st state. So, so I admire Elon's stand, but yeah, as a shareholder, I also have to think in that way. I'm like, okay, this is not great. And the way, it's not just what he does, but the way he does things. I'm glad though, and you sent me that comment to Tevis where Elon said that he was like tempted to respond or whatever, or just go crazy. And he didn't, he refrained. I'm like, thank you, Elon. Thank you. But yeah, as far as like the political stuff, I won't go too far into that, but if you guys are wondering what that would look like, look at what happened when Ross Perot had a strong third-party run and who that gave us as a president versus who it would have given us. It changes elections. It usually doesn't mean the third party is elected. And also going back to like really where there's a third party, a strong third party, was Teddy Roosevelt running a second time after he basically left the office. He had already served as a vice president, took over the presidency because the president died in office, and then ran again successfully, was eligible to run another time and said, I'm going to go hunt in Africa, basically. And did not like Taft and his policies, so came back, ran against Taft, lost in the primary, ran as a third party, the Bull Boost Party. It's a cool story. It's neat, like the speech, the optics and everything like that. But it gave us Woodrow freaking Wilson, who was the worst president we've ever had in America and probably ever will have. So, yeah, not great.
I want to finalize by talking. I just looked at some research, and I think it's easy to pick on the politics part because it coincides with the immediate sales drop. But there's over the past few years been a lot of competitive Chinese EV companies that have now surpassed Tesla in revenue overall that are now available in the Nordic countries that weren't previously available. The Peugeot has also become more popular as well. And so that obviously has taken part of the market share. So EVs have yet to slow down. So instead, they're purchasing other vehicles. So part of that might have been the fact that it is political, but also part of it is this increased competitiveness and cheaper vehicles as well. And I think also when the statistic that was kind of taken, the 60% decrease, a lot of that was the reduced amount of actual vehicles going to the Nordic countries as they were preparing for the ramp up that you, in fact, yourself got involved with recently here, Roy. So, I think that sometimes people can cherry pick these numbers and immediately attribute it to specific parts. It's not to say that sales aren't down overall, regardless. Like January 2024 to 2025 are still down, but you have to think a lot of that could be contributed to whatchamacallit, just increased competition, because still, even I think it was over 95% of the Nordic countries bought EVs in the past 6 months or something like that. So of the cars sold. So I just want to put out there, sometimes can't believe all the headlines, fake news, as Uncle Donnie would say. But yeah, I just wanted to say a little bit more detail around potentially why those numbers seem so drastic.
By the way, I see a few questions not related to what we're discussing in the comments. Please put those there, guys. Usually the last 10 or 15 minutes, maybe a little bit longer, we'll do a Blitz edition, and we'll just go through those really quickly, or try to be very quick. I'm not great at that.
Yeah. I was totally going to say something. You threw me off with the Woodrow Wilson being the worst president. We can talk about that offline. Because I have
What
a couple
about Justin Trudeau being the worst prompt? No, I'm just kidding.
Thank you, Matt, for that. Yeah, the dollar index being weak. I had a friend of mine, interestingly, text me this morning with the big, beautiful bill passing in the Senate, saying, he said, we have to look at European stocks. And when I asked why, he was like, "Oh, the U.S. is not looking good." And I said, like, my response to him basically was, everything else is backed on the U.S., so that makes the U.S. pretty much the only game in town. And this guy who has never owned a single fraction of a Bitcoin in his life is now, for the first time, looking into buying Bitcoin, which I thought was interesting, right? Because, you know, you sort of are normalized to these debt ceilings being risen. I mean, I've seen it happen quite a few times, and the deficit ballooning, and it's like, oh, the interest payments are more than we spend on our military and blah, blah, blah. And you're like, wow, that's crazy. And then you see it a bunch of times. You're like, whatever. You know, another day goes by and life goes on. I don't know. Is it always perpetually going to be like that?
Yes.
Maybe. Yeah.
Yeah, no, I mean, I felt like I was late to Bitcoin, honestly. I had some younger friends that I mean, they're very intelligent, that got Bitcoin very early, and I mean, not like super early, not pizza Bitcoin early, but they were pretty early. And they were talking to me about it, and I was just like, nah, it's a pet rock, essentially. And what clicked for me was, you know, when they talked about fiat, they're basically like, well, aren't you concerned about fiat currency? I'm like, actually, yes. Let me give this more of a think and listen. And so it's 2021 where I was like, okay, I get it. I get the thesis. I'm going to start buying. And so some people are just late. And it's okay also, like, guys, if you're listening in the comments, you're like, hey, I don't want to get into crypto. I don't believe in it. That's fine. You can still make plenty of money with equities. I don't think of crypto in that way of like, oh, I can make even more with crypto. Like, I do, it goes up, but there's a lot more risk too. And I just think of it as a bit of a diversification. So
yeah.
Speaking of crypto, let's talk about this. Are you familiar with this here? And I was looking for the ticker.
Planet? What is this? Oh no.
Bitmine.
Bitmine.
Yeah, Bitmine raised 250 million. Installs Tom Lee. You ever heard of him?
I think so. He's the drummer, right?
Yeah. Tom Lee, the drummer. I think that's why he wears a fancy suit. Yeah, it's really interesting. You know, Ethereum has been kind of dead for a while, and yet there's really a lot built on it, especially if you see, and we are beginning to see NFTs make a comeback a little bit. A lot of those are through Ethereum, and there's Solana and others as well. And a lot of the stablecoin activity is also through Ethereum too. So it's not a dead chain. There's still a lot happening with it. And Tom Lee is very bullish on Ethereum as well. You guys have any interest in this? Like Bitmine itself just absolutely went crazy. So here's let's see, where is it? Yeah. So it was 416 and it's a 10x, which is crazy. I wouldn't buy this here, but yeah, a lot of people are copying MicroStrategy. This is a little bit different. There's some others out there too, but thoughts?
Yeah, I mean, the bigger tell for me is the frothiness of the market that can go 10x just because Tom Lee is on the board, or what they plan to do with it. The fact that stocks can go 10x overnight is kind of not a healthy thing for the market. But other than that, I mean, like, I hold Ethereum directly. I'm not buying any, ETFs or anything like indirect from that perspective. I haven't bought Ethereum in God knows how many years, maybe like 5 years or so, 6 years. But yeah, Bitcoin is the main one that I'm buying. And I'm not really into, like, I was in the miners for a portion of the time, to this question. Like, I was in the miners for a little bit. Now I'm not. anymore. I still hold a little bit of Clean Spark, but
Yeah, I hold like 300 shares. I've never seen crypto miners as a great long-term vehicle. It's good for trading, and as the price has risen, I've gotten out of most of that. I think I might get out of the rest of it this week, or depends on the price action. I've been selling covered calls aggressively in the remaining 300 shares. I'm just like, hey, if these get out, great, and if I make premium, that's fine. But yeah, I think there's some that are better than others, but like the biggest worry is when you see miners that are chasing new sources of revenue. It's not because they're diversifying; it's because they realize their model doesn't work. It just doesn't. Not the long term.
yeah. I know, Matt, I think you're in MicroStrategy, right?
Excuse me. I own one whole share, but I do sell puts regularly because I do believe in the strategy. I just don't necessarily know how much upside, and I also have we are entering the tail end, in my opinion, of the cycle for crypto. I could be wrong on that. I'm utilizing previous data to help with future forecasts, which, as we know, doesn't always work well. But I sell puts at a very far down strike price from MicroStrategy. I don't believe in the miners. I never have. I've mined myself, and I've always realized that it's better, likely, to mostly buy the actual crypto itself. And so I align more with what MicroStrategy is doing rather than the miners themselves. It's a very capital intensive business. You might have a room of profitability, but you're playing with a lot of what's the word I'm looking for? You're playing with fire, and you're playing with the ebbs and flows of the market. And I feel like nobody from a mining perspective has figured it out well yet to be able to make it work, unless they were well, I don't want to get into that. That's the whole cycle itself. But I have yet to see a mining company that I would want to put money into personally.
Yeah, there's some that have diversified, I think, in an interesting direction. Like IREN is one of those but I'd rather just get into the direct business. Like if I was bullish on that, on what they're doing, like why not CoreWeave? Or, some have gone after cloud, but that's great. But why not invest in cloud? Like AWS, Amazon, Google Cloud, GCP is like doing great. So just invest in Google. Like there is more upside with the smaller cap stocks, but there's not much safety with miners. There just isn't. Some are also going after like energy play. It's just invest directly in what you actually believe is a thesis there. And honestly, if Bitcoin is your thesis, MicroStrategy. I'm not invested in it. I don't like it. I'd rather just own Bitcoin directly itself. But
Yeah, that's my stance. Just Bitcoin directly, and honestly, nothing else. Like there was a time where I was buying other coins, and now I'm just, I want to keep it simple,
I actually bought $1,000 of Ethereum this week, though. So it's up a little bit. But I'd sold my Ethereum. I think it was about the same amount. I never had a huge amount of Ethereum. When it was a little bit higher, I believe, and Bitcoin was a lot lower, I'm like, stablecoin is doing so much of what Ethereum and also a lot of the altcoins were positioned to do. Now, the weird thing is a lot of stablecoin does run that it has to run on the level ones, in some cases, are level 2 rails. So it's not like that those are all scam projects that have no use or utility at all. But at that point, when I realized that, thankfully early enough to catch most of this Bitcoin run, I'm like, I'm not a Bitcoin maxi, but I'm like, okay, it just makes sense. Go into Bitcoin, sell all this other crypto and just put it in there, including Cardano. I've liked Cardano for a long time, but I'm like, hey, stablecoin just does so much of what the thesis was. So,
yeah. Yeah, I have nothing more to add on that topic. I don't know if Matt does, but if not, we can move on.
I has Bitcoin.
Yeah.
And some Ethereum, but mostly Bitcoin.
Still DCAing into Bitcoin?
Yep, every 2 weeks, just add about, I think it's up to 3% of my paycheck, and yeah, I mean, while I think there will be a cycle, and I might turn that off when I think that there is some exponential increase above 110 to happen, probably in the next 6 months or so. Once we hit that peak again, where I perceive it as a peak, I'll probably start to reinvest 3% of my paycheck again.
Very nice.
And
Yeah,
by the way, everybody asking questions, I promise I am bookmarking all of the questions, and we're going to get to it at the end of the show. Instead of jumping back and forth in between a million topics just to answer your questions, we'll just cover them all at the end. So make sure you stay till the end of the show for those. Sorry, Roy. Go ahead.
and there's a lot of great questions too, guys. Keep them coming. I wanted to ask you guys about this because I thought this was really interesting. So the context before we go on to this image here is Llama 4 was released. Llama 4 is open source, but it's basically Meta's. It's kind of not really true, but essentially. And overall, it was a bit of a disappointment, actually more than a bit of a disappointment. And rather than do Apple's approach with Apple Intelligence, which was mostly vaporware and chewing gum, and then they just said, hey, no more Apple Intelligence. We're done. We don't do that anymore. AI, it can go away. And they actually released 2 different studies that kind of smear LLMs and are like, LLMs aren't legit and they're not really thinking and they're not really reasoning. And it just was like, Apple, like, if your strategy is hoping that LLMs go away, I'm sorry, that's not going to work. But Zuck did the opposite approach. And he's like, okay, we got a lot of money and we've got a vested interest to really do well here in LLMs. And so he ended up hiring a lot of talent. Now, initially, there were some offers. I don't know if any of these were, I don't know the full detail of the package, but the headline was offering $100 million package for these extremely high profile people. And initially, Sam Altman was like, oh, yeah, nobody's taking it. Well, there's a lot of nobodies. So you can see here from OpenAI, there's a few others as well. Scale AI was something they bought out completely. Andrew Wang, kind of like a mini junior Alex Karp, diet knockoff, Alex Karp maybe, but a lot of credible people from what I understand. So I'm kind of curious what you guys think of this, the strategy versus Apple's, and do you guys have Meta at all? Or are you investing or thinking about it?
Yeah, I mean, I can start. I think so. I don't have Meta. I've had Meta in the past, and I don't currently own Meta. I think Meta is a great play to have. I think Zuck has proven time and again that he is a great operator through different parts of that life cycle. It's very difficult to be a founder that takes that company to multi-trillions through, from Facebook all the way to the Instagram purchases, WhatsApp, whatnot, and then the metaverse, and now in AI. What I will say is it's interesting because the tech sector has always been about scarcity. It's why there's all of these high total compensation packages because of that scarcity. Talent is scarce. Competent talent is scarce. And that's accelerated even further with AI, right? It seems like, I forget who was saying it. Maybe we were talking about it in a podcast or I heard it in a podcast, but it's got to that point where like these AI engineers, the top ones, they're like sports people, right? Like they get contracts, multi-million dollars, and they can go to any team that they want, whether it's Meta, Anthropic or OpenAI and all of Gemini, everything in between. They're like they're like sports athletes, like they get these multi-year contracts to the point where like Meta is trying to buy entire companies just to poach these people. And that's really cool to see because it lends credence to this idea that, okay, this tech talent is scarce and this tech talent is what's going to drive the actual competitive advantage of some of these companies being the dominant force driving the AI revolution. If Meta can spend, 50 or $100 million capturing the top 25 engineers and paying them tens of millions of dollars, and that makes their LLM just a fraction better, multiply that by the total addressable market, and you can have a clear distinction in terms of the usage across the board relative to their competitors. And that alone can drive their valuation multiple billions of dollars, if not hundreds of billions of dollars higher. And so if you think of it from that perspective, you might say, oh wow, I'm paying 10 million for an engineer, I'm paying 25 million for an engineer, or whatever the case may be. Well, if they're going to differentiate your product and build the moat of your product, then that's well worth it. It's an investment that anybody would take when you think of it from that perspective. Now, obviously a lot of noise in between from point A to point B, but that's how I would think of it.
Matt, what about you?
I can't contribute intellectually to this conversation.
So I think we'd probably all agree that LLMs essentially are commodities. Commodities do work, though, if you have the power to scale it. And Meta really does. Like, they have a great reach. And one of the things that I think is interesting, too, is not just thinking of these AI researchers. That's what they're labeled. And again, I don't know them well. I think I've recognized 2 names, and the rest is just the company that they came out of. But at least the 2 that I know, they're not just like these are LLM guys and that's it. And so you can think about like not just what Meta is trying to do perhaps in the next couple of years as far as like having a credible LLM and being able to use that as a commodity across their own ecosystem, which has some benefits, but also leveraging that for their users. The other thing that's really interesting is just to see where Meta goes with this for future products. So the Quest 3, for instance, like it's in science fiction, Ready Player One. I'm sure you guys have hopefully read the book because it's better than the movie, but watch the movie too. And there's a lot of books, a lot of sci-fi written about this, like, the metaverse or, basically virtual reality, like real virtual reality that is immersive. And one of the criteria for that to really help is not just on the hardware side, but to have something that is basically capable of generating new content on a regular basis that isn't world breaking, game breaking, or anything like that. Otherwise, you need a massive team of human engineers to do that. So the LLMs are something that, as they continue to improve, they will get to the point where they're able to do this. So it would be interesting to me, over the next like 5 years, perhaps, Meta rolling out something that is more immersive than what they have right now. And I think that they have good hardware. I've played with it. It makes me dizzy. So I'm one of those where it just doesn't work for me. But my kids, they freaking love it. And if they create a generative world or several types of generative worlds around certain themes, there's going to be a significant demand for that forward product. So Zuck normally is several moves ahead. This is one of the rare places where he's been behind. Again, I'm not in Meta. I don't invest in Meta. I do have it for the competition, for the draft stock. But just because of personal conviction, I can't own it. But I think that this is probably a smart move, not a waste of hundreds of $1 million. And frankly, even if it is, Meta prints cash right now, so they're fine. They're one of the few like large caps where you can't really make an argument that AI is going to disrupt them. They just get stronger. So,
and yeah, if anything, I think the cash flow is sufficient for Meta where they can take bets like this and not. I mean, like I said, I don't know much about what's going on, but I prefer companies continuing to innovate and try new things and fail. Rather than them just contributing it all back to shareholders in the face of buybacks and dividends.
Yeah, Apple's strategy versus Meta strategy. Like it's going to be so interesting over the next 5 years. You see how that plays off. I'm very that would actually be a really interesting pair trade. But I don't know. Apple can remain irrational for a long time. It's
unfortunately. So there's 2 times where I've actually bought into Meta. Previously was Facebook, and I bought that back in 2017 when it was like $72 a share. And I just, at the time, 2017, I wasn't really into tech stocks. I was more dividend focused, etc. So I sold it maybe for a break even or a slight loss, or maybe slight profit, but nothing to write home about. It was like 25 shares or something like that. So nothing big. It was a lot of money for me back then, but not so much now. And then when they changed the name to Meta and everybody was shitting on them pretty much for a couple months, how could you spend all your money on this? And, why are you, etc. I took that opportunity to buy, I forget whether it was calls or shares or something like that. And I don't remember what it was, but for some reason I sold it not too long thereafter. I think it might have been when I lost money on GameStop and I had to shore up some cash. I think that probably was what it was. But I thought it was a very brilliant move. And so I continue to believe that companies that innovate and fail will find something that eventually makes money.
Yeah, absolutely. I love it.
And
you guys have any
speaking of Roy holding Meta, and outperforming.
Not anymore.
Look at this.
Yeah.
Oh wait, did this just got updated?
Yeah.
Oh no, it got updated. It was much higher, and then when I refreshed the tab, it got updated. But you were leading the humans
Yes.
in the race of our stock draft, and now Manuel is leading the humans,
Yeah.
and ChatGPT is leading the entire pack.
No,
I wish I was invited.
ChatGPT did surprisingly well. Gemini, I'm just glad to see it's no longer winning. It was yesterday, and I was like, oh, come on. But it's the most degen portfolio, and Plug get picked. It was up like 20-something%. So I was like, yeah, that's not going to last. So
What dragged for you today, Roy?
What's that?
What dragged for you on that today? That
Everything except for Lululemon.
there we go.
Literally everything was down. Some were by 3 to 5%. I do have Palantir in that portfolio. I'm like, 11th round pick. I'll go ahead and take it. The only pick that I didn't like that I took in hindsight was Snowflake. I wish I didn't do that. I don't know why I had it in a higher tier than it should have been, but I mean, like hindsight. But after the draft, I looked at it and I'm like, yeah, probably Manuel wins, and I get number 2. And yet the audience had it the opposite. They liked Manuel's the least, and then mine, I'm like, nope, audiences are wrong. Fade retail.
Yeah, crazy.
But I'm heavy cybersecurity in that. I'm also heavy crypto as far as Coinbase and I'm forgetting the other. But no, I just over 12 months, basically their narrative plays. So rather than worry about price and valuation, even though there could be some local pullbacks, and HIMS is one of those. It's my first round pick. Just for where it's at, I'm like, hey, this is a good opportunity over the next 12 months. Even though I think that there's probably going to be a lawsuit and it could go down a lot further, I think 12 months is long enough for it to recover quite nicely. So
it definitely can go down further. Okay. Do we have other topics, or are we going to get to these questions? What do you guys?
I don't want to go into this like too much, but I just want to throw this out there because I hadn't seen this before. Just kind of a little bit of preparation from this. So I need to dig more. But Cloudflare is one of those that is just been a really interesting, really strong company for a long time. I think that they hit new all-time highs again this week, ticker symbol NET. What I thought was fascinating about this, they came out with a new plan. And so one of the things that's happening is the way that the web is being accessed is changing dramatically away from the model that Google has thrived in to a somewhat unknown model as far as how it'll be monetized. Under the Google system, advertising pays for the web, pays for the clicks. You figure out like SEO optimization, and that helps you figure out, what you need to do as a business. But for both, Microsoft pitched something that was not very compelling as far as the way that they thought the agentic web could work and function. But Cloudflare is basically like, hey, one thing that we can do, and I think 20 to 25% of the entire web's volume actually goes through Cloudflare. So it's pretty massive. Is rather than just say, okay, ads will slowly deteriorate and we have nothing other than good graces to replace it, they instead will allow micropayments to access content. What's really interesting too is this is one of those where a lot of these new products really come into play. So AI agents, as they actually access the content, that they end up basically paying a microtransaction, so a fraction of a stablecoin. And stablecoin is a lot more fractional than the US dollar, so it's something that can be very much leverage for this type of thing. And also, if there's some sort of referral, rather than a traditional form of advertising, you could actually give some of those credits back to Anthropic, whoever else is accessing it. So it's an interesting thing to kind of keep track of. They do have partnerships, including Condé Nast, Time, Associated Press, The Atlantic as well.
Yeah, it's an interesting model, similar to like LLMs, right? You're paying for tokens, and it's based on your usage, based on your volume that you're doing, that you get charged. Either way, I think Cloudflare is going to be fine. They just have such a dominance in that space, and their growth is speaking for itself. I mean, it was down like 5% today on the back of this news, though. So, but I attribute that to the whole market being down, really.
Yeah, really. Today felt like a mean reversion day because PayPal was up, Lululemon was up, the name that we'll talk about tomorrow was up. There's a lot of other plays. I think Nike was up at one point. I don't know if it continued to be up, but a lot of those names that have been smashed to bits and hated by the market, they went up today, and everything else went down.
Yeah. Matt, any thoughts on the Cloudflare?
I'm not smart enough now.
Okay.
Sorry.
Cloudflare's the other Matt is who I was really asking. Cloudflare's platform does not rely on the on the big three cloud providers, so, so they have a luxury when it comes.
So they have the luxury when it comes to driving down costs and winning contracts. Yeah, they're going to be better than fine. Like, I don't know, like they're not cheap, but I realized when we did the draft that I'm underallocated to cybersecurity. I think that is going to continue to do very, very well and compound over the next 5 to 10 years. Like, AI doesn't deteriorate that thesis; it just makes it even more imperative. And we see things like, when Coinbase had that massive leak, the implications there. It's a big, big issue, and AI has made it so it's even more imperative that people have their cybersecurity in place.
Yes, the secret stock shall not be named until it drops.
Yeah, probably tomorrow, late morning.
At some point tomorrow, yeah. All right, let's jump into some questions. How do we feel about that, gentlemen?
Well, I'll just leak the stock. It's Joby, guys. I'm just kidding. It's not.
Archer.
Yeah.
Imagine we built anticipation for Joby.
That would be like if it's April 1st, like we're at the end of March and April 1st was tomorrow, then you'd know it's Joby coming out. So
Curtis, thank you so much for the $10. Keep up the good content and research across all your channels. Much appreciated. Thank you very much. Let's see. Oh, I mean, speaking of stocks that have a growing retail following, anything about Oscar? If you got time in between discussions, Mandeep asks.
You have any thoughts on this, Matt?
Yeah, so I did initially take a position in Oscar, and I do think it has an opportunity to do well. I think the thing that bothers me still is how politically tied it is, and as we've seen with Tesla, that isn't necessarily something that I want to be tied to. So while I still think it's a good opportunity for people that want to be in it, it didn't sit well with me. And while initially I was potentially going to buy it, and then Chris kind of dove both feet into it as well. I took my 20% profit that I was up because I started purchasing in the high 13s, low 14s. And, on the way up, I added as well. And so when it got to like the $20, $21 range, I did sell and I actually put it back into Nubank. And I think I told you that at lunch, Roy.
You did, yeah.
It just didn't sit well with me. And while I do think that if somebody does have that risk tolerance, they could hold on to it. It could be a great opportunity. I just, yeah. So I took my 20%. I was happy with that. Would I have taken money or sold it if I wasn't up 20%? I don't know. I'm not normally a swing trader. I normally like to buy and hold things for a long time. But that was something that I couldn't stomach. And I have stomach for risk for a lot of things, and so in that respect, I just couldn't hold on to it.
Yeah. So I did if you guys are interested, comparison between Oscar and HIMS. Different companies, kind of the same space, not exactly. Like Oscar is direct insurance, HIMS is telehealth and more of the prescription type of product. But there's a lot of similarities in the companies. Go watch that video, but I'll show you the two things that I didn't like beyond just the space. Like it's not a space where, like HIMS, people buy it, you profit, it's great. The way that insurance companies work is they deny people's claims, and so they make money, and so you do great as a shareholder. I don't love that. Especially if it was like UNH or something like that, they are notorious for doing it. There's been some legislation that has kind of changed that, but they're still known for doing that. And it's one of those where I'd rather just own Philip Morris at that point, Can you throw this up, Tevis? So operating leverage is one of those. This is one of those things with HIMS where you saw this sort of thing where initially operating expenses were keeping up with revenue. You can think of Oscar kind of as far as a company 2 or 3 years earlier than Hims is right now. So the question mark is this one-time blip here, but we see other blips as well, where revenue actually outpaced the increase as far as operating expenses. Is that sustainable and continuing? Management thinks so. I couldn't figure out a reason why I should believe that, other than the political favors. It does help them, Affordable Care Act and everything. But like honestly, because of the political connections with Donald Trump, they have 3.5 years to do really well, and I would not want to be in this company in 4 years. I would not. Like, it would just be. So could you make money as a trader? Could you hold it for a couple of years? I think you could do fine. The other issue was, let's see.
Shares outstanding is increasing. Can you look at that?
I mean, it's not that bad though. 240, 251. It's not a tiny amount of SBC, but it's actually less than Hims. A better one is really shares outstanding, or not shares outstanding, but SBC in relation to revenue. I think that might, right here. So it's fine. Like, I wouldn't worry about that. They have a clean balance sheet as well, but it's just, I don't know that there's really enough differentiation here as far as a product. There's some opportunity maybe, but I think it'll do fine. Like Matt, I just don't think it's a Hims. And I just realized this is the blitz, so I should have been shorter. My apologies.
All right. Best drone stocks, propulsion stocks. I mean, Matt, you can say Rocket Lab, I guess, as a propulsion stock. I'm not sure. What do you guys think?
Rocket Lab. Just kidding. No, but seriously. Joby. No, I think that we all know that Rocket Lab participates in launch, but they also participate now in hypersonic rockets as well. And so with that, you could say there's a total addressable market. They've entered Europe. Europe needs a complete overhaul in their hypersonic flight testing. At least the United States has some, while they are behind other countries. And then there's a huge deal, which I talk about a lot on Rocket Lab Weekly, and this is the only plug, and I swear I'll give it back and not overtake the segment. But there's a big deal. Anybody can look at it up on Grok or ChatGPT about what they call HyFlight, HYFLITE. And that was done in October 2024, maybe November 2024. That was a US, Australian, as well as UK cooperation agreement to share hypersonic information, maybe not entirely, but at least some parts of it, to be able to help, with NATO essentially, and making sure that the NATO and its allies are aligned when it comes to defense. Obviously, that is good for companies like Kratos, potentially, if they get more contracts, and as well, looks like going to be great for companies like Rocket Lab, due to the fact that they now have a contract in the UK. And obviously, if it goes to the UK, most likely goes the rest of the EU, considering in that consortium, while UK and the EU are not, or the UK is no longer in the EU, at least in that consortium for hypersonic for Europe, the UK is still part of that. So anyway, just food for thought. And I think that there's a big opportunity associated with that. And HASTE, which is something that's been done before, is 1/5 the price of Lockheed Martin's, or maybe it's Northrop Grumman's Minotaur missile, which is $50 million. The HASTE are about $10 million. So in that respect, much cheaper to launch a hypersonic, about 20th of the price comparatively to the previous contractor. So in my opinion, very bullish for Rocket Lab.
Well, there you have it. Roy, do you have anything for this question?
Not smart enough in this space. No.
All right. How would you rate these 3 stocks? Coin, PayPal, SoFi, Hood. And are there any other stocks you would recommend instead of the 4 listed above? Let's start with, do we want to stack rank them?
I'll be careful to not recommend stocks, but as far as just stocks, this is not quality of company. Quality of company, I'd say Hood is number 1. But as far as stocks, so that's including valuation. Don't know the timetable or anything, but just for myself, I would say PayPal right now. It is cheap, and I think that they're going to hit all-time high in 2030. I'd say Robinhood. I'd actually say SoFi next. There's a lot of tailwinds over the next 2 years. Robinhood is an amazing company. It's done very well. And I think there still is upside over the long term. I'll continue to hold it, but it is not cheap. And then I would say Coinbase after that, simply because crypto winter, I think, is going to be a real thing. It's going to slaughter Coinbase, in which case I will probably buy Coinbase because it is a high quality company. I would not want to own it here, even though there's a ton going right for it. They're absolutely killing it as a company. They are.
Mm-hmm. Yeah, I would probably have a similar ranking, SoFi, and then PayPal, simply based on the valuation. Hood should be higher on that list, but they're richly valued, I would say, right now. And then Coin last, simply because I think that crypto has pretty aggressive cycles, and then that could also work against them.
Matty Dinero.
It really depends, man. I mean, it's in the eye of the beholder, and this is part of the problem. Is like you don't know a person I've never seen this person before in my life, so no disrespect there. I don't know your time horizon, risk tolerance, objectives for your portfolio. I don't know if you're okay or not okay with crypto, because if you say yes or no, PayPal has a part in crypto, Coin has a part in crypto, Hood has a part in crypto, even now SoFi's have it. So I guess all four. So how you feel about that and what makes you sleep well at night, it's going to be very difficult. If you make me ask, it really depends. Like I would say, and depending on what you're looking at the long-term potential of them all, and you want something that helps you sleep really well at night. I like SoFi. Like I honestly think that is going to be an extremely good stock. And regardless of what people think, whether I'm a bear or bull, about the topic and all the infighting that's been going on X. I honestly think that there's a great underlying bank there that'll really help you sleep well at night. You don't have to worry about the volatility of earnings associated with something like that versus something like a Hood. While I think it's a great run company and I love the user interface and it's been getting a really good traction with respect to user signups and additional deposits, it does have a large component associated with the revenue has a large component associated with crypto. And, depending on what your time horizon is, it could flow right through that or it could make you very scared. And the thing I don't know is, when it comes to stocks being volatile, if the stock retraces back to the 40s or 50s, are you immediately going to sell out and be sitting on a 50% loss? So it's really difficult to answer some sort of question like this. And that's why I always try to help people with respect to getting their own mindset in order to understand how they would approach something, because they might approach something completely differently. Like Roy said, I mean, he likes PayPal. He thinks PayPal is going to be great. The buybacks is a great opportunity as well. And then going back to Coinbase specifically, if you're looking in the next 12 months, this could be another company that with crypto winter coming in the next 18 months or so, retraces by 40, 50%. It would be a great opportunity, like Roy said, which I've also thought about adding very substantially during crypto winter for the next leg up in the cycle. But somebody might look at it and say, no, that's too volatile for me. I don't want it. So I can't rate this. I can only rate it for myself. And so I can't rate it for you.
It's a very legally correct answer with many disclaimers. We are also not financial advisors, so I don't think you want me as your financial advisor. Honestly, I would put you in way more degen things. Can IREN skyrocket just like CoreWeave can? We'll go to Maddie first.
Don't know enough. I have a very preliminary view on it and would add nothing to the conversation.
That's my stance.
Yeah, I'll say, I have a cursory view of IREN. I actually think it's interesting as a crypto miner, one of the few that I'd be. But again, going back to what we said earlier, if you're interested in what CoreWeave is doing, rather than why are you investing in IREN? Invest in CoreWeave, Nebius, another competitor. Well, really, it's just those two at this point. But
absolutely. Okay, next question. Roy, what made the dollar weaken the last couple of months? Was it on purpose?
There's several factors. One of those is manufacturing here in the United States. The debt load is a big part of it. I think that there's probably some intentional aspects. Trump has talked about it in the first administration that he had. I don't remember remarks from this administration. He did make remarks on trying to drop the 10-year. But I mean, he knows that a weaker dollar is pretty good for our economy overall. There are some negatives. It's not all pure upside, but really, like, the main thing is bringing it back into parity. If you remember, like, back in the almost 20 years ago now, there was a lot of complaints towards China about currency manipulation, and even in the, what was it called, Liberation Day, where Donald Trump revealed all those things, there was specific talk about currency manipulation there. That's what Donald Trump means, is basically taking measures as a government to, instead of defend your currency, allow it to actually become less valuable, which increases your positioning as a net exporter for other countries. And so that was deemed as, most currency and manipulation is ridiculous. It's not real. With China, it was really happening. And so is there an element of intentionality in this? I would say absolutely. Donald Trump has talked about increasing and improving the manufacturing base in the United States and helping to change some of that trade gap as well. I don't think that'll ever close, but this certainly helps the United States products versus others in the world. It also hurts importers. So, yeah.
Yep. Okay. I think Matt's chat is way crazier than all of our chats put together. Next question. Heinz asks, what does a fan portfolio have to be to get to hang out with you guys? Heinzie, I hung out with you in Vegas. Like, I don't think it's any certain amount. But Matt, maybe we want to comment on this. Like, Matt and I have been chatting over this weekend around, like, it would be cool to do more events and meet more people that are viewers. Of course, nothing is really set in stone, but it's always a treat for us as well whenever we, go have dinner with somebody who's a viewer of the channel or grab drinks or whatever. And it just makes it more personable. You put a face to a name or a face to Twitter handle, whatever the case may be. I went to Amit's thing in Toronto, and that was quite fun. I met a bunch of people there that are viewers of the channel. And I think we want to do more often. It's just a matter of organizing it and planning ahead, which I don't think either of us are tremendous at. But I think the desire is very much there. Matt, anything to add?
No, I think, I do get a lot of personal messages. I think the best thing is not be annoying to be point blank. I mean, there's a lot of people that message me out of the blue for no reason. I do read most of the messages, but some of it is just like, people trying to get free stock advice. If anything, all I do is talk about stocks. Some of the people that have stood out most to me, which is somebody we actually had dinner with last night, who was a follower. He connected with me personally, like on a different level. And basically told me the thing that's beautiful is, it's like, you can just like, Matt, thank you so much. You've helped me so much. That's awesome. Like, I love seeing those things, but hearing more granular details about how I have helped you achieve your objectives is going to be more likely to be like, oh shit, like, that's awesome. And it opens the door for me to like want to read more. It's like a novel. Think about it that way. Like, I hate to be like as crude as this, right? But you think about it, there's literally dozens of messages, if not more, in a month that I get talking about this. And so I hate to be like, but I only have so much time. And so it's like, if you're like, hey Matt, you helped me get a house. Like, I had a really good friend of mine who I actually helped with investing as well, get a house. And I'm like, that is something that moves me. I can like think about that and like, oh my God, like, invest, instead of people who are just like, you helped me a lot, thanks. It doesn't really get a personal connection. So that's my kind of thought process, is like, and more than happy to meet up with people. Like Tevis said, I would love to have more events. I would love to be able to have it where we have like actual conferences and live podcast stuff like that. We'll figure that out. Nothing set in stone, but at the end of the day, I can't meet all of you, unfortunately. But the hope is, as well, is I am just one human being, and I can't connect with all of you at once. Like, imagine me trying to have this conversation with the probably 150 or 200 of you all at once, right? While you're all wanting to ask your own individual questions, we probably wouldn't get anywhere. So luckily, it's just the three of us kind of organizing it as we go along, and saving things to the end. That makes it kind of more of a coherent podcast. So, um, you know, I'm more than happy to meet people. I've met a lot of you guys already, and I'm very thankful for the platform you guys have given me. But just keep in mind, you got to stick out some way or the other, um, to unfortunately get time. It's just how it goes. Sorry, that's not a very good answer.
I mean, look, it's always a treat to I think it's a little bit different for you and Chris, Matt, because the both of you have so many plays that like are almost like swing trades, and a lot of, and even the long-term stuff you guys have, like it's run quite a bit. And so even from the dinner last night, this viewer was saying how impactful Cash Flow Chronicles had been. But even on my stuff, where it's like I've just been talking about one or two names on my channel predominantly, and then obviously more on the unstructured live streams like this, it's always really refreshing to see comments where people are like, hey, like, thank you so much for all the content that you put out and this and that. Like, it's rewarding because it makes it less of, you're just talking to yourself in an empty room through a screen, and brings home the fact that there are real people on the other side of it. And I think that is really refreshing. And so bringing that IRL is something I'm all for. It's just a matter of, having the opportunity to organize something.
How do we get to hang out with you personally, Roy?
Yeah, I'd like to know.
It helps if you live in Houston. So Matt and I have lunch periodically. Yeah, time is just at a premium for me, so it's hard. I've had to shoot down some people, move some things back. I've even had ACEO that wanted to interview with me, and I'm like, no, sorry, I don't have time. So yeah, have to finish up this PhD. Going to be doing a lot of work on it over the next 2 weeks, but yeah.
I was the CEO. You pushed back. No, I'm just kidding.
Did you guys reveal the stock y'all were talking about in Tevis' live stream? We have not, and we are not going to until tomorrow. So I know Roy and I are both making content about that. I think Chris is also going to put out content about it. I'm pretty sure Tanner will put out content about it at some point or another.
I'm just a guy.
Matt is absolutely going to talk about it with Chris on Cash Flow Chronicles at some point.
Oh yeah, on Cash Flow Chronicles, but I'm not making special content.
1,000% you guys are going to talk about it.
I'm too lazy for that.
You're in this though, right, Matt?
Yes, sir.
All right, cool. Yeah,
maybe more than Tevis. I don't know.
You're not.
I'm probably the minnow here, but I went in a little heavier than I usually do for a swing position. So.
I went in a good amount, and I plan on adding more. Anyways, tomorrow is when you know more. So
we'll reveal that it's Joby tomorrow, guys. Don't worry.
Yes, exactly.
Take two.
Okay. Tevis, thoughts on good, bad if HIMS would sue Novo first? Perhaps you can briefly discuss pros and cons. Look, I think a lawsuit is not the happy path for either company because of the uncertainty that a lawsuit gives. It's not a guarantee that even if HIMS were to sue Novo, that they would come out on top, or they would come out with like a way more strategic advantage than not. And so ideally, I want to avoid a lawsuit at all costs because I also want to preserve that partnership potential down the line. But if HIMS were to sue Novo, I think it would be sending more of a statement than the other way around. Let's put it that way. Okay, next. Are you guys concerned of SoFi SBC?
No, again, it's you always have to look at SBC is not bad as long as they're executing. I think SoFi revenue is growing appreciably. And you'll especially see that because of a weak Q2 that they have a comp against. But SBC in terms of revenue is actually falling, I believe. Correct me if wrong there, but that's the thing to pay attention to.
It's falling. It's like under 10% now, and so I'm not concerned about it either.
Yeah, here's the chart real quick. This is what you want to see, not the other way. Now, there are times when a ramp in SBC will happen. There is noise in certain quarters. Don't worry about that. Like if you look at Palantir, they have one huge quarter. It's because of RSUs. Like those sort of things happen. But the overall trajectory of this is what you want to see. If you see the opposite, there has to be a really compelling reason for that. So, for instance, if a company did the Mark Zuckerberg thing and they used massive stock-based compensation to bring a dream team of AI experts, maybe it's worth it. But in general, you don't want to see that.
I mean, for me on that one, they're giving out share-based compensation like they're a tech company, and they're not. So they need to get that shit under control. Sorry.
Just fucking throw the grenade in there.
I'll say that that's fair. I mean, honestly, the CTO needs to be fired. So he does. He's terrible. Like what he is.
I don't disagree with that at all.
Never mind.
I don't disagree with that one bit at all. Anyways, we can move on from that topic.
I think. Well, maybe we'll say that for SoFi Weekly, but I think that they actually have just acquired their new CTO.
What show?
Oh, you're right.
All right, everybody.
Fridays.
What is this SoFi Weekly?
Yeah, I just got subpoenaed on stream.
Circle went crazy. Why PayPal stablecoin don't get that love? This is you written all over it, Roy.
Yeah. I mean, the stablecoin, they honestly, so I'm bullish on PayPal, but I will criticize companies that when I think that they've underperformed, even if I think they've done a lot right. Stablecoin is one of those. They did great launching it before anybody. August 2023, people are like, why stablecoin? What is PayPal doing? They launched it before Chris came on board. So it was launched in a typical Dan Schulman way where it's like, hey, it's just something. And maybe it'll be something in the future. Hopefully. We'll see. We'll leave it alone and see if it grows, which is like the dumbest freaking thing. Dan Schulman, like he deserved to be fired even more so than Jeremy Rochelle, the CTO of SoFi. Anyway, Alex Chris has made it and leveraged it for a number of interesting things for PayPal, including basically redoing Zoom from needing to be divested away from simply because they couldn't perform the margins there. They've used it for PayPal Ventures. They've talked about using it, which is actually not the next immediate impact for stablecoins, but the one after that, which is business payments, which have a lot of issues and problems with it. Stablecoin does it faster, cheaper. Instant settlement is really like the main aspect of it. And also the smart contracts really come into play at that point. But in essence, PayPal has underachieved. They failed to scale pay USD as rapidly as I thought they could. And now there's a lot of competition. Now, does that mean that it's a dead product? No, absolutely not. I think that it will grow and do well like a lot of stablecoin, and they benefit from having it within their ecosystem. But I don't think that this is going to be it's going to be the necessarily the coin that really makes e-commerce use stablecoin in mass. I think it might be something else.
Cool. Did you guys ever look at Sentinel One?
Yes. I like that they have a squeaky clean balance sheet. Valuation isn't bad. I was watching them, especially when I looked at them before, but when CrowdStrike had the issues, they were poised to benefit from that, and they did not. That concerns me. I don't know the space well enough to, look at quality of a company. They sound like they're quality, but I'm not seeing it in terms of the way that others, not the market, but actual companies perceive them. That's a problem.
Matt, money?
No idea anything about it.
Not qualified to talk on that subject. Thoughts on a Figma IPO? Yeah. Okay. Interesting. So Figma, I've been really interested in from a professional curiosity perspective. I remember when Figma came onto the scene, all of my designers were moving away from, other platforms over to Figma. and it was just so collaborative. It was so easy to use. I've used it myself. I use it regularly, and if you'd asked me 6 months ago or a year ago, I'd be like, I'm absolutely buying that. No questions asked, with both hands, as many shares as I can get. I think today, though, the difference is that I think AI has the serious potential to disrupt Figma's business model. And Figma has to adapt to that. Why? Because you go straight from ideation to wireframing to high fidelity mockups, all from a prompt based point of view. I can go into ChatGPT or whatever, Notebook LM, and just basically say, hey, generate me a mobile app mockup that has modern UI with this color composition, and it would have something that is super usable. Now, breaking those out into individual components and, for an actual designer to do their job is still like, you still require Figma, but AI is always going to get better and better. Today is the worst AI is ever going to be. And so I think that if AI can abstract away the ideation piece from a designer's toolbox, then Figma is going to suffer tremendously if they do not adapt to that.
Yeah, I don't know anything about it, so.
Okay, Matt.
I'm not smart enough to talk on the topic.
Okay, well, that's basically my thoughts on the IPO. Now, it is a very high-profile IPO. I think it's going to fly. I think it's going to get to a stupid, crazy valuation. I think Adobe is going to, profit off of that. But at the end of the day, like, there is an open question unanswered about Figma, and it is exactly how will they deal with or lean into the evolution of AI when AI gets to a point where it goes from just creating an image of a wireframe down to being able to break down the individual components of that wireframe. I think that's going to be a big, big, big trouble for Figma. Anyways, Doug asks, can you guys talk about the valuation process on OpenAI? I'm looking for a bear thesis.
It's a commodity. I mean, like, so one thing that I'll say, I mean, it's a commodity and it's not being valued like it at all. So that's a danger. If you're investing in it, you're investing in it because you think Johnny Ive is going to come out with something credible and be able to pivot into a hardware type product or integration, be it like the next Apple, hardware and software integration. That would be compelling. I don't believe it, but it would be. The other thing is you have to think that there's enough differentiation between what OpenAI offers and that they can also monetize on it versus their competitors. There's a ton of competition in this, and you're not seeing people like Mark Zuckerberg bow out. Instead, he's actually stealing talent. Now, on OpenAI's behalf, I don't know about Sam Altman, as a person, but as an executor, I think he's obviously very good because if you remember, OpenAI 2 years ago had Ilya and a number of others depart from the company as well. Now they've just had a recent round of it. So I would not count OpenAI out. If it was a stock, it would probably be trading a lot lower and would be potentially a good time to enter if you were bullish on a long term. But I would rather not invest in a commodity product that doesn't have a clear runway for monetization. If it was like really cheap, maybe, but it's not being valued cheap, especially when there's so much competition and so much unknown. There are just easier plays, like just companies that benefit from LLMs. Doesn't matter which one it is, but like as LLMs scale, it's like, oh, this company benefits. That I'd rather invest in that, even if there's less upside in OpenAI.
Yeah, Matt.
Hard for me to really look at a company where I don't know any of the revenues. I don't really know any of the profits. I don't know where its trajectory is. It's hard. A lot of that's been kept private, and so it's very difficult for me to kind of understand or figure out. And it's also my lack of knowledge as well. So I'll include that to put a valuation on something. So it's like somebody saying evaluate this AI company when I don't know anything about AI and what the potential of it could be. It would be pure speculation. So that's my bear thesis on it, is that what ends up coming out, as Roy might say, might end up being something that's a commodity, and eventually is going to have to keep cutting prices, cutting prices, or not charge as much, or be completely free, and have to figure out another way to subsidize what they're providing, which is basically, in my opinion, something that Google has done very well, which is kind of advertising and search. And so, if you're able to kind of couple what OpenAI is doing, and I don't know, like I said, it's way over my head. But yeah, it's very hard for me to evaluate a business without any sort of revenues or future trajectory of revenue.
Yeah, I mean, what I will say is that, like, okay, yeah, I agree with Matt, but also as an AI company, it's always going to get a premium relative to other companies, always, because like you're seeing what Meta has been doing in terms of poaching talent. Like they're paying millions of dollars here for good talent because it can get that arbitrage, like I was talking about, from uh, moat differentiation perspective. But at the same time, do I think OpenAI has a moat? I mean, you could argue from a brand like recognizability perspective. Is that a word? Maybe. Um, from a brand recognition perspective, that's the word. I was like, I'm pretty sure that's a word. From a brand recognition perspective, OpenAI has, I think, more brand recognition than these others from the average typical person that's not on X, that's not watching this podcast, because OpenAI came out first, and for an entire year or so, it was really the only game in town. And so they have a big first mover advantage. And so when you think about it from that perspective, yes, you could argue that OpenAI has some differentiation, but because AI is so quickly evolving, there's going to be other players in the space that we don't necessarily know how it's going to shake up. I mean, to Roy's point, it could very well become more commoditized. You could be banking on the fact that, the Johnny Ive partnership, that they can come out with something that will further differentiate them. But if I had to, rank it right now, I would say that yes, OpenAI does have some differentiation, but it's very thin and it's also fleeting because everybody is continuing to innovate. And I think the form factor is also going to change throughout time as well. I think it's going to lean more towards voice and be integrated like deeply into voice assistants versus just being text based. So yeah, that could be your bear thesis if you had to find one. And then the other thing to add is like, it's really the company that has the deepest pockets that can afford to buy all the top resources, and where the top resources want to work from a mission statement perspective, that I think is really gonna make a difference here. Matt got nice and comfy on the couch.
How many questions do we have left that you see, Tevis?
We'll do. Let's just do maybe like 4 other questions. Yeah. Would you guys be averaging up on Hood here in the $93 range?
No. Too many other better buys. It's a very volatile stock. Great company. Is recently like in the high 20s, low 30s. I don't think we'll see that again, but if I had no position, I wouldn't be averaging up, but I'd start a very slow DCA.
Okay, Maddie?
Oh, would I buy Hood? Hood for me would be an auxiliary position. So this is what I'm doing. But I agree with Roy. I think depending upon what you think the next 5-10 years might look like, I think they have very strong fundamentals going out into the future. So in that respect, I think the valuation could be much higher in 5-10 years. But for me, because it would be an auxiliary position, I'm willing to wait. I don't normally wait on buying companies if I believe that they'll do well, but because it's an auxiliary position and I don't really have any capital at the moment to deploy, my hope would be is that I would be able to kind of show up with that capital in the future and time it a little bit better. Like I said, I'm not a timing guy. I generally see you like the stock, you think the stock's going to do well, buy the damn stock regardless what the price is. Not
Yes.
to say overpay, right? But if you're trying to, if you think that let's just say Hood is going to be worth $300 in the next 5 years, who cares if you're buying it at 95 or if you're buying it at 70? Just buy the damn stock, right? I tell that to people all the time. People trying to time market labs, stuff like that as well. When I think it's going to be a 4 or 5x from here potentially. So to answer that for me though, just for full disclaimer, I believe that the crypto revenue is so substantial. For, we're not good at people. Viva la Mexico. The revenue from crypto is so substantial that I would wait until we enter some sort of crypto winter where things really cool off and the revenues either subside, so that one of two things is going to happen. Robinhood's going to have to shrink the amount per trade they get because currently they get about 50, sorry, well, I got to say 50 points or 0.5% of every transaction that they make on the platform, if I remember correctly. It's averaged up to like 0.51 or 0.52 per transaction this quarter. Or we enter some sort of crypto winter where just overall transaction amount goes down. And so that coupled with price going down would have an impact on the actual revenue that would be coming in, and that would allow me to potentially purchase in 18 months, likely cheaper than what it is today. But like I said, really depends on what you're thinking about 5, 10 years from now. And for me, I personally am going to wait. And that's not just Robinhood, by the way. That's any crypto stock. I anticipate. I plan on, maybe not for my personal Bitcoin, but anything that I've sold puts on or anything like that. When I do anticipate that there's been some sort of peak in the next 6 to 12 months, I do plan on getting rid of or closing out those opportunities and waiting for a large pullback for crypto winter.
Yeah, I will say Robinhood's not going to pull back as far as people expect. They're growing in a lot of legs. They're executing at a high level. I mean, sentiment can always do things, but they're not going to be. It's not going to be 2022, barring some crazy crypto winter, like crypto outlawed in the United States. Okay, yeah, that would do it. I don't know how they do that, and that wouldn't happen. But yeah,
Okay, we don't have time to cover all the questions, so maybe we just do rapid fire on some. I want to ask AJ's questions because he got mad at the chat for me not bringing them up. Just very quickly, are either of you in Oracle, and are you both in New?
Oracle only in the draft, no actual position. I think it's decently positioned. New, yes, I have a large position both in Leaps and also shares. Latin America is going to do well. That and Melly are positioned very well.
Maddie?
I sold my new Leaps to be able to get into Oscar once I made my 20% on Oscar, as we talked about. And I didn't feel comfortable. I actually transferred back to New, but this time for shares.
Yay.
Cool. Thoughts on a Klarna IPO?
I don't really like buy now, pay later as a standalone product. I think there's more regulation coming. We've seen some impact as far as FICO. I think that's just the beginning. So great company, I think, as far as like quality, engineering, and everything. I think CEO is very interesting. The way they're leveraging AI is interesting, but no.
Mm-hmm.
I'm long. Sorry, go ahead, Tevis.
No, please.
I was gonna say I'm long on the memes for Klarna. They're
Yes.
great. Keep them coming.
Yes.
But I have yet to do my due diligence on the actual fundamentals, but it doesn't look good from what I've heard. But like I said, I would caveat that with I don't know.
Cool. Roy, Amit said you were bearish on him, so please share your thoughts.
Short-term bearish, long-term bullish. The lawsuit threat is back because Novo broke up with HIMS in a very nasty public way. HIMS likewise fired back. So I think a lawsuit is coming, which is not bullish for HIMS. Don't let anybody say otherwise. They're flat out wrong. Pharma has incredible legal teams. At best, it's going to be a long, drawn-out legal battle, which will be costly for HIMS, and they'll emerge victorious. And that's not a great thing. Now, for people that are looking to enter at a lower level, that is a great thing for you because HIMS is a very volatile stock that swings both ways. So I've exited. I have always had a core position, and then I've had stocks that I'll sell covered calls on more aggressively. I'll say that my HIMS position is 20% of what it once was.
Wow. Wow.
A lot of that's taking gains at higher levels too, but yeah, it is what it is.
Okay.
And I'll get back in if we get the dip from the lawsuit or not.
I have 2 more questions here that are more light that we can answer in 30 seconds or less. And I'm sorry, everybody, I'm not marking questions anymore. Love you all, but we've been out for an hour and a half, and there's been a lot of questions. Tevis, would you ever start your own company? Yes, I am working on something on the side. Both Roy and Matt have had a chance to take a look. It is a product that I hope to release hopefully by the end of summer or in the fall. It has to do with options trading. Very excited about that, and I think it's going to be really well. I'm really excited about it as a consumer, and I think other people who are in options trading will be excited about it. So can't wait to share that with everybody. And then this next one is.
Well, hold on. So you're not going to mention your hair product that you're releasing? I mean, look at that great hair.
I mean, yeah, gray hair. Gray or great?
Great.
Oh.
Emphasis on the gray.
All right. Last question of our stream is for Mr. Margarita. Matt, what was your favorite part of the Mexico trip? Yeah. Chris Patella saying dinner, guys. Chop shop.
Love to Chris.
6:02. He gives us 2 minutes. God forbid. I don't know, man. Last night at dinner was a lot of fun. Being able to meet the follower in person. We've been chatting for a long time.
Yeah.
And obviously, just being able to smoke cigars, hang out with you guys, and just drink champagne, have a good time. That was a lot of fun. But honestly, man, as always, it's learning from both of you. I've really enjoyed reading the book that I'm reading, that you recommend actually as well, Tevis, and the follower that we met last night, Psychology of Money. So I've been having a lot of fun with that. Sitting by the pool, just drinking pina coladas and hanging out. There's nothing wrong with that. And I think the best part for me, I would have to say, which is an underlying piece, which unfortunately I had to put everything else below that, is I really needed a good disconnect from work. And I haven't had that in a while. And this is probably the best vacation I've had to be able to disconnect from work probably ever, maybe since 2019. So in that respect, it's been the top 2 vacations in that respect, which unfortunately, as much as I love everything else, has been very good for me because it was draining on me pretty severely for the past several months.
Yeah, I mean, I echo a lot of that, and we're gonna have to end up posting that picture, Matt, with at dinner with the cigars. That was fun.
Yeah.
We're doing that again tonight by the beach. Gonna have a couple of fun drinks and chats, and then I think we're all flying out tomorrow. It's been a good trip. So next video you're going to see from myself is going to be about our secret stock. Next video you're probably going to see from Roy is about whatever stock, because the secret stock video is like 5 videos from now because Roy posts like 10 times a day. And he's still too busy to talk to CEOs. But this has been a great show, an hour and a half. Thank you so much, everybody, for being here. Chris is very hungry and asking where we are because he wants to go get dinner. So I have to go oblige. This show is such a shit show. We'll see you next week on the Bootleg Weekly. Thank you so much. Like and subscribe. Do all the things. Follow all the people as you haven't. And